I'm going to spend probably just about 30 minutes on the BRRRR method. And if you guys have any questions about it, feel free to ask along the way or at the end. And so I bought a property not too long ago. Actually, it was wholesale to me. And so I bought the property. Wasn't quite sure what I was going to do with the property. I didn't know if I was going to flip the property or hold the property. But one of our team members wholesaled the property to me, and so I bought it. It was property in Landover, Maryland. Bought it for 150,000, and I financed it using a hard money lender. And so the hard money lender financed the acquisition and the rehab costs. And so towards the end of the project, I said, I'm just going to go ahead and rent it out. And so after the rehab, I put it on the market. I'm primarily a voucher holder investor, Section 8 investor. So I was able to rent it out to a Section 8 recipient. Went through all of the inspections, termite inspection, lead inspection, got my rental license, did all that. Um, Moved the voucher holder into the property, and then I refinanced out using a DSCR loan. And so I paid off the hard money lender, got permanent financing, and because I bought the property so well, I was able to get money back. And so all the money that I put into the deal, I was able to get back after when I refinanced. And so the money that I was able to get back, I used that money to buy another property. And so what I just described to you is the BRRRR method. I bought the property right. I rehabbed it right. Did a really nice rehab as if I was going to flip the property. And then I rented it out. Now you can rent it out to a market rate tenant. I chose to rent it out to a voucher holder. And then in the end, I refinanced and got money back. I still have that property. I probably have about, I don't know, $200,000 in equity in the property. Um, and so today I'm going to explain to you guys what BRRRR is. And I want you guys to do as many properties using that same method as possible. Because the benefit of doing that is you're recycling the same cash to build a portfolio. The problem in the past has been we buy a property to hold. We've got to wait 4 and 5 and 6 years later to save up enough money to buy another property. But by using the BRRRR method and doing everything correctly, you can recycle the same money and continue to buy more and more properties. And so it's very realistic to do two, three, four BRRRR properties a year because or one a quarter because you're recycling the same money. And so what is BRRRR? BRRRR is to buy below market. And so we're going to buy it right according to the Mayo formula, 70% of the asset repair value minus repair costs. So we're buying it right. If you don't buy it right, BRRRR's not going to work because when you go to refinance, if you buy it too high, you might be able to refinance and pay off the hard money lender, but you're not going to be able to cash out. So you got to buy it right. And then you want to rehab it to increase value. We're rehabbing it right to increase value. One of the ways that we increase value or force appreciation is by adding bedrooms and bathrooms. And so what I do, what a lot of our coaching students are doing is maybe buy a 3 bedroom, 1 bath, turn the basement, add to the basement a bedroom and a bath. So we're turning a 3 bedroom, 1 bath into a 4 bedroom, 2 bath. One of our investors took a three-bedroom, one bath, took out the living room on the main level, put a bedroom there, put two bedrooms in the basement, took a three-bedroom, one bath, and made it a three, four, five, a six-bedroom house, and rented it out to a voucher holder. And she's now getting, it's the property's in DC. She's now getting $7,000 a month from Section 8. And so we've got to make sure we renovate it right, and then we rent it. And we've talked about renting the property. Now we're going to refinance. We use a DSCR loan because we get approved through really the merits of the property, not necessarily us. So DSCR is an investor loan. It's definitely for investors, and you're able to qualify. They will take a look at your credit score, but they're not going to take a look at your income. They're not going to take a look at how much cash reserves you have. They're not going to take a look at any of those things. They're going to look at primarily the cash flow of the property. And as long as the cash flow equals or is greater than your mortgage payment, you'll get approved. But then also, if you have more than 75% or 75% or more equity in the property, that's when now you're able to cash out. And then again, like I said earlier, with the cash, you're now able to scale and repeat the process. Why BRRRR works? BRRRR works. You're recycling your capital, like I said. That's what makes it great. We're using the same amount of capital. You can scale faster than traditional investing. So we're scaling our portfolio. We're going from no properties to two or three or four properties in a year's time. We're building long-term cash flow, and we're increasing equity fast. And so these are the things that we want to do to build wealth for ourselves. Why Baltimore? And so you can do BRRRR anywhere. A lot of our coaching students are doing BRRRR in DC, but Baltimore works because it's a low entry. And so you can buy low there. The entry point to buy in Baltimore is low. We're seeing properties in areas that we want to be in, as low as 80, 90,000 that need work. Turnkey, we're seeing properties from 130, 140, 150,000 turnkey already renovated. And so Baltimore works because the entry level is low. There's a strong rent demand. Over 65% of the people in Baltimore rent. So there's a strong rent demand. High rent to price ratios. So rent to price. So you can buy low and rent high, buy low and sell high in Baltimore. And then there's multiple growth neighborhoods. As Anthony said earlier, sounds like he likes Edmondson Village 21229, Harlem Park 21213. And then there's many other neighborhoods. I think he mentioned Pigtown, which is also good. Charles Village is good. Waverly is good. BRRRR Edison is good. 21213 is actually BRRRR Edison. 21223 is Harlem Park. And so there's a lot of growth neighborhoods in Baltimore. You just got to get there and learn where to buy the properties. All right, step one is to buy. And so we've got to buy right. And we've got to buy according to the Mayo formula. So we're buying according to the Mayo formula, 70% of the after repair value minus repair costs. We want to target distressed properties. Um, so we're targeting properties that need work. We want to focus on off-market deals, and then we want to buy below market. Now, when I say focus on distressed properties, we just want to make sure that, as a side note, I want to make sure that we're buying properties but on streets that don't have a lot of board ups. And so if we're focused on Baltimore, Baltimore street by street, block by block, if we're focusing in on Baltimore, just got to make sure that they're safe neighborhoods, not a lot of board ups. As a matter of fact, voucher holders are not even allowed to live next door to a board up. And so Section 8 won't even allow that. And so I just want you guys to make sure that when you're buying properties, just to make sure that, there's not a lot of board ups on the street. Any questions so far, you guys?
If you buy next to a property that somebody else has just bought and they're fixing up, is that a good piece of property?
It is, especially if there's no other board ups on the block. I once had a property that we did some marketing to absentee owners. The guy called me. Long story short, I negotiated um, a price of $8,000. He wanted 20. I negotiated down to 8. Um, there was a bunch of board ups on the block. It was in Harlem Park, subdivision called Harlem Park on West Baltimore. And so what I decided to do with that property, because it had some board ups, even though I saw some investors working in that block, I decided to hire a company just to trash it out. So they just cleaned it out. And then I put it back on the market. I gave it to an auctioneer. I gave it to Ashton Auctions. They auctioned off the property. Long story short, I made a quick $20,000. When I got to the settlement table, I asked the guy, I said, why did you decide to buy the property? He said some friends of his was buying properties were renovating properties in the same block. And that's why he decided to buy. And so he knew that that block was being cleaned up. So he decided to go ahead and buy that property. And so it made sense. I've driven by, that was a couple years ago. And now that whole block, where once there was two or three or four board ups, there's no more board ups on that street. All right, so we're going to buy the property first and we're going to buy it right according to our formula, and then we're going to renovate the property. And so we want to do a good job renovating the property. We don't want to over renovate. We want to look at what the renovations are in the neighborhood. We want to focus on value add improvements. One value add improvement, you guys, is adding bedrooms and bathrooms, like I just said. But then like recessed lighting is a value add. Nice baseboards, new baseboards. A lot of Baltimore properties have baseboards that have been painted over, 4 or 5 times. So when the property gets tested for lead-based paint, a lot of lead-based paint is in the baseboards. And so we want to add a newer, cleaner look. We want to control our costs, focus on kitchen, bathrooms, and flooring. With the flooring, we're generally using LVP, luxury vinyl plank flooring. And then obviously we want to use reliable contractors, which is not always easy. That's not always easy. But when we're rehabbing, um, and then also many of us, especially like myself, renovating in Baltimore, but living 45 minutes, an hour away, we have to make sure we show up. And that's the challenge that a lot of investors make. A lot of the investors in Baltimore are not from Baltimore. They're from Prince George's County, DC, Philadelphia, New York, and they hire contractors and they're not there to manage the contractors. So you need to make sure that they know that you're showing up or you hire someone to manage the project for you and let them show up. Because if not, there's going to be a lot of delays. And the contractors, if they know that you're not coming or coming periodically, they're not going to show up every day. They're going to be off doing other projects. All right, so we're going to buy the property right. We're going to renovate the property, and this is kind of a before and after, and this is realistic in Baltimore. Picture on the left-hand side is like almost like a shell, and then you increase the value and do a nice renovation. All right, so then step three is we're going to rent the property. Again, my preference is Section 8, but if you want to use a market rate tenant, that's fine. Even though I use Section 8, I still screen them. I still check their credit, do a background check. I run the rental comps just to make sure that so I know exactly what I'm going to rent the property for. And then I get them to sign a lease. And then I go through all the proper channels with at the Section 8 office to make sure that this tenant is ready, willing, and able. I want to make sure that before I even buy the property, I want to make sure that the rent the rental comps are going to be more than what my mortgage payment is going to be. And so this is a side note, you guys. I want you guys to take note of this. When you're doing BRRRR, when you're doing BRRRR and you're using a hard money lender as an initial matter, and then after you renovate and rent, you're going to use a permanent lender, DSCR lender, you want to meet with a DSCR lender before you even buy the property because you want to make sure that in the end you're going to qualify. There's a different qualifications from a hard money lender to a DSCR lender. And so you don't want to get stuck with the property and have to foreclose because you qualified for the hard money, you renovated, bought the property, renovated the property, and then when you're going to the DSCR lender and they say for whatever reason you're not qualified. So get qualified for both hard money and a DSCR up front. Get qualified up front. And then you'll have a better idea of what your numbers are and whether or not you're going to be able to cash out. Then we're going to refinance. And again, the refinance is based on a new appraisal after repair value appraisal, not a as is appraisal. And so they're going to appraise the property for the current value. And so where it once was a 3 bedroom, 1 bath, maybe now it's a 4 bedroom, 2 bath. They're going to look at the after repair value comps to determine what they're going to refinance you at. And so just keep that in mind. And so you want to make sure that you've got the capital um, and you want to meet the appraiser. You want to meet the appraiser at the property and you want to give them the comps. Now, they don't necessarily have to use the comps that you give them, but you want to make sure that you talk to the appraiser and that you give them prepared comps. Don't just let the appraiser go or just give them the lockbox code. You want to meet the appraiser there. Now, this is a real live deal that happened this week. And so one of our investors in my coaching program called late Monday night and said, "Look, Greg, I got to meet an appraiser at the property the next day, and I need comps." They bought the property for around two. They were all in at 350. So I don't know. They bought the property for about in the twos, and then they renovated the property. They took out a hard money loan. Now they used a hard money lender that they needed less than 10% down. So, but let's just say they needed 10%, which in this case was 35,000. This is a property in DC. I want you guys to take out your calculators. So this is the one slide that you've got to understand. This is the most important slide here. I want you to understand this. And these are real numbers. So in her case, she put down about she put down less than 35. We have a lender, a hard money lender that depending on your situation in terms of your credit score, in terms of your past performance, we have a hard money lender that you have to put down 5% or less than 5%. All right. So she was all in with the hard money lender at 350. She called me late. She said, I need some comps. So this was like at 11 o'clock at night, Monday night. So I ran comps for her. We were on the phone. I was able to find some comps as high as 550. Um, she met the appraiser. I emailed her the comp. She met the appraiser, showed them the comps, talked to them. She was able to get it appraised for 525. You guys with me? A DSCR lender, she's preparing for the DSCR lender. And so this is what I want you guys to put in your calculator. It appraised for 525. So put 525,000 in your calculator. Put 525 in your calculator and then multiply that number by 75%. And so a DSCR lender will lend at 75% of the after repair value. Now, some will lend at 80%, so you get more money. So they'll lend at 75%. And so in this case, 75% rounded up is 394, rounded up. It comes to 394, 750, but I'm gonna round up to 394. If you guys are stuck, just let me know. But
I got,
this is important. You guys got to get this. Everybody got this so far? So the lender is going to use 75% of the appraised value, which in this case is 394. And so now we're going to subtract, the lender's going to give 394. The DSCR lender is going to give 394. The hard money lender gave 350. So we've got to pay off 350. So if we pay off the 350, at least 44,000. So now the hard money lender is paid. We've got 44,000 back in our pocket. Even if she used 35,000, which is 10% of the 350 to purchase the property, she was able to get all of her money back and then some, plus another 9,000. That's DSCR. That's how you cash out, and that's how you recycle the capital. And that's how you use the same capital to continue to buy more and more properties with the same capital. Go ahead, Luis.
So, quick question. What was the turnaround time? So between the time that that person, that investor, got the approval for DSCR loan and a hard money loan, like I'm confused. Was it like a month period, 2 month period, 6 month period? What was the time frame between the person getting the first loan and then end up with the other one? What was the
So
time
it
frame?
has to be, that's a good question. It has to be at least 6 months.
Okay, got it. Thank you.
So you have to hold the property for 6 months. So they call it seasoning. So the house has to season for 6 months. Even though, and that's easy to, I mean, I'm sure it was longer than that. I can't remember when she bought the property. So this is what, April? But the answer to your question is you have to hold the property for at least 6 months. So in this case, let's just say that she put up 35,000, even though she didn't, she put up a lot less. She was able to cash out at 44,000. She did cash out refinance. Now she's going to take this 44, replenish her money, and now she's already calling, hey, I need another property. And that's what DSCR is. This is the essence of DSCR, doing a cash refinance, getting your money back, and then buying another property. Any other questions before we move on from here?
my question is when you first buy the property and you fix it up and you rent it out, the renters do stay in the property the whole time. After once you rent it out, all the way to the next step.
No, the renters move in after you've renovated the property, then you're gonna rent it out. Now they're in, you're gonna rent it out. You have a up most hard money lenders, you have a whole year to complete this whole process. You have a whole year. Um, so
So
yeah, tenant's in there. Tenant's going to be in there 5 years, 10 years, 20 years. And so while you're doing your refinance, the tenant's already in there.
okay,
And the lender's going to look at the lease. They're going to make sure that the rents are equal to or greater than the mortgage payment. They want you to have cash flow. Go ahead, James.
Yeah, Greg, why wouldn't that 44K be held in reserve uh, against that property for any expenses or anything that might happen?
Held in reserve by the investor.
Yeah, set that 44K aside as a
Yeah.
reserve for that property.
She can. She can. It's up to her. It's money. It's her money. She can. She's going to replenish the money that she's going to reimburse herself for all the money that she put into the property. So now, honestly, you got an asset with none of your own money in it. She can put money in reserve, but normally what we do is we take the cash flow and we just put that away and use that as reserve. We don't spend that money. We just use
Okay.
that as reserve. But that's definitely an option.
Okay.
Hey, Genesis.
Hey Greg, I have a question. For the DCR loan, do you have to have a tenant in place before getting it approved and financed by this DCR loan?
No.
Okay. And then the other thing is that
So
why
if
you're
you don't,
also
if you don't, they're going to run comps. They're going to use the market rent.
okay. And is that why you're also stating to meet with a DCR loan because then you'll be able to see what the mortgage amount will be compared to a market rent?
Absolutely.
Okay. And then last question is, do the DCR loans, do they provide loans for under an LLC or does this all have to be under your personal name?
LLC.
Okay, perfect. Thanks.
All right. Any other questions before we move on? G. Marie, you must have a question.
I did. I had my hand up. I'm lowering it now.
Oh,
And
I don't see it.
it was about time frame, but she kind of asked it about someone asked it about do you have to have your tenant in? Because my question was how quickly do I have to get a tenant in? And does that have anything to do with the success of the DCR loan? But you answered that. And then my next question was in finding because you really pushed section 8 with us. How do what's the time frame of having your property inspected, or is that Section 8 inspection going on at the same time your renovations are going on so that when your renovations are done, you are already approved for your Section 8 tenant, or are those two separate tracks that can't happen at the same time?
Yeah,
Because
your
I'm trying to figure
Section
out how
8,
hard it is to get a Section 8 tenant, or how quickly can we get the Section 8 tenant?
you can get the Section 8 tenant very quickly. If the property is in Baltimore, there's like I said earlier, 65% of the people living in Baltimore rent, and so they're plentiful. There's a list that goes, I think there's a waiting list of like 5 years for Section 8. So that's the easy part. And I have tenant placement companies that can help with that. What was the other part of your question? Or did I answer it?
Yeah, I believe you answered when the other lady, I believe, answered, or the guy asked the question about does it have to be rented? And you said no, the DSCR will use market rents if you don't have a tenant in there.
Right.
But it, you'll be talking to your DSCR person. Sounds like when you go to get your hard money, you've already got the end of the deal in place so that you know where you're going when the deal ends, if I'm understanding it correctly.
Yeah, I mean, there's some variables. That's why
Hmm.
I was on the phone the other with our other coaching student. She wanted to make sure that she was like pressed. She was like nervous. I got to get this appraisal. I got to get it. I can't find the comps on my own. Can you find the comps for me? And I was able to find the comps, and then she was able to give it to the appraiser, she needed it to appraise for over 500,000 so she could cash out. She wanted to get all of her money back. And she couldn't on her own, she couldn't find the comps. But I found her two comps,
Hmm.
and then she was able to give those to the appraiser to get that high number, in this case 525, um, so that the 75% of it came up to 394, which is, above, more than enough to pay off the mortgage. And then
Hmm.
with the rest left over, now she's got money for
Money to do a next project.
her or money for, her next project, that kind of thing.
Okay, thank you.
Greg, is there certain areas in Baltimore that pay higher, like higher rents for Section 8, or certain areas that are better in terms of like how quickly you can rent out a property?
So I know you were on the east side. You were on you still have the property in Brooklyn, or did you sell that one?
It's under contract now.
Okay. I mean, I think that's a good side. I mean, that's really Anne Arundel County, right? That's not part of Baltimore, is it? Brooklyn?
Correct. It's Anne Arundel.
So I like to say every zip code, there's parts of it that's good and parts of it that's challenged. I tend to stay on the west side. So I personally like 21229. I like that area. It's a working class neighborhoods. They do rent fast. We've had a lot of our coaching students buy in that area, and they've had a lot of success with getting the appraisals done, getting tenants in there. So I like that area. But then there's other areas. Pigtown, you can still buy low and rent high. Um, Charles Village is good, 21218. BRRRR Edison, 21213. And there's many others. And then I'll give you a list. Send me a text or an email. I've got a handout that has like the top 10 areas in Baltimore to invest in.
Thanks, Greg.
All right. And so the last step, once we refinance, we want to repeat the process. And we want to use the funds that we cashed out on for our next deal. We want to build our portfolio. We want to scale consistently and fast, not too fast, but this is just a great way. DSCR is just a great way to um, replenish our capital using the same capital that we initially put in, and then just keep going. This is another deal in Baltimore. Purchase price. This is realistic for like 21229. So let's see if these numbers work, you guys. Let's go back. Let's go back to our calculator. Let's see if these numbers work. So purchase price is 95,000. Rehab cost is 50,000. So we're all in at 145, right? Am I right about it? So we're going to get a hard money lender to lend us the money to purchase the property, um, financing 145. That's acquisition and rehab. Hard money lender is going to lend 145. And let's just say for this exercise, we've got to put down 10%, which is 14,000. We put down 14,000. And now let's say that at the 250, which is ARV. ARV is 250. We're going to multiply the 250 by, let's just say 75%. We get 187. We're at 187. So now we're going to subtract our all-in number, which is 145, by the 187, and we're getting 42,500. Now, if we put in, um, what did I say, 13,000 or 14,000,
14.
we've more than gotten our monies back, right? We got our investment back, our initial investment back.
Plus a
And,
profit of 28.5.
and so these are real numbers. This is a real deal in Baltimore. The rents are a little higher than this, about $2,000, between 2,000 and 2,500 is cash flow, is the cash flow, is the rent. So this rent number is a little low. So that's DSCR. You guys got to know the math. So this is the math right here. Go ahead, Jean Marie.
So if you do this same deal, but you're buying and holding, right? You're not selling.
You can.
You can sell, but you can buy and hold. Then you would just be refinancing with cash out to do the next deal with a tenant in.
Right.
Okay, I just want to make sure I was just these weren't all sales stuff. Thank you.
Hmm. All right. Any other questions here, you guys? All right, here's some mistakes. Overpaying. And so that's always the biggest mistake of any real estate investor. We cannot overpay. We've got to stick to the Mayo formula, 70% of the after repair value minus repair costs. If you can stick to that, you will always be able to do a cash out refinance to a DSCR and replenish your capital and use that same capital to buy two and three and four properties a year using the same capital, not having to add to it at all. Let's not underestimate repair costs. Oftentimes, the contractor will give us a price, and then there'll be change orders. You guys say no change orders. You do your inspection. Uh, give me the scope of work. Give me the draw schedule. No change orders. I can't afford it. So whatever you tell me is what it's got to be. And so let's not underestimate the repair costs. Let's screen our tenants. I've really never had, in my whole career, I've really never had problems with tenants. I know other people have, but you just have to really screen them. Background check, credit check. If you can check to see where they lived previous to your property or where they're living now, you want to check on all those things. And then not planning for the refinance. As I said earlier, you've got to plan for it. You got to meet with the DSCR lender ahead of time before you even buy the property. Because like I said, I've seen some situations where there was no planning and they got through the first step, they bought the property, got through the second step, they renovated the property. They got through the third step, they rented the property, but then when they went to refinance, the lender said you don't qualify for one reason or another. And so you just got to make sure you meet with the lender ahead of time. Okay?
Greg,
Any
what would be some examples of why you wouldn't be able to qualify for one of these loans? Have you come across like the most?
I don't remember why. I'm just thinking about this one person who bought a 6 unit building. And then also keep in mind, as I said earlier, the qualifications to qualify for a hard money lender is different from a DSCR lender. It could have been credit. It could have been it didn't appraise, so they bought it wrong. Um, maybe even the rents didn't equal out. Maybe the rents were less than the mortgage payment. Um, it could have been a whole host of things. That's why you've got to meet with the lender before you even purchase the property. All right, so how are we finding these? So if it's Baltimore, and I'm doing this is DSCR. I'm focused on Baltimore, but this can be anywhere. Now, obviously, Baltimore has a lot of foreclosure auctions. And so auctions, you can find them at the auctions. You can find absentee owners. And so the one property that I told you guys about where I bought the property for 8,000, we cold called. And so we got a list from PropWire at the time. I don't think it was PropWire, but we were able to get an absentee owner list and we cold called them and made an appointment. You can use direct mail with the same list. Tons and tons of properties. If you go driving for dollars, you can get them from other wholesalers. And in Baltimore, you can just find them on the MLS. So there's ways to find these properties. I don't think that's going to be the issue. You just got to be prepared to find them. But you can find these opportunities. I would focus on a particular neighborhood and then just go driving for dollars in that neighborhood, do direct mail in that neighborhood, cold call or get somebody else to cold call, focus on auctions in that neighborhood.
Um, Rick, when if you're doing driving for dollars and you're seeing a lot of houses, do you think um cold calling and the other one that you just mentioned is a good thing to do as well?
Absolutely.
Okay.
Hmm. All right, you guys. Any questions? We can help you guys. I want to help you guys with your deals, your systems. You know, we do have a coaching program, so if you guys are interested, let me know. But we can help you with this. We find properties all the time. If you haven't been to our 4-day course, we just completed our 4-day course last week. We've added a tour, and so we did a tour Saturday. But we looked at some opportunities, and we had a good time. We looked at some opportunities. Um, we analyzed the opportunities. If you haven't been to our 4-day course, just go to bbc4day.com. It's only a $27 investment, but that includes 4 days of learning. We actually did a review on Friday, and we were out in the field on Saturday, and we had a really nice luncheon at the end, just $27. If you haven't signed up for it, please do so. And then also, if you're interested in our coaching, just go to gbschedule.com and we can I can talk to you about our coaching program, gbschedule.com. Any questions, you guys, about anything that we just talked about?
Um, that multi-unit lending that you were talking about a few minutes ago, is multi units a lot harder to go through that process with?
I don't think so. I wouldn't say it's harder. You just have, financially, you just have to be ready.
Okay. Okay.
All right. Are you guys ready to do a BRRRR? Who's ready to do BRRRR? Raise your hand.
I have a question before that question.
Go ahead.
I wanted I signed up. I want to sign up for the 4-day because you're doing a different market. Is that all right for us to just take as many classes as we want? Or maybe that's a rhetorical question, but yeah, I just took the 4-day, but now you're doing DMV, which I'm very interested in how that's going to look in comparison to Baltimore. So that's
Yeah,
my
you
question.
can. You can. I'm also going to be doing at the second week of May. May 18th is the auction, tax foreclosure auction in Baltimore. And so I'm doing a tax foreclosure auction tour in Baltimore on May 18th. I think it's 18th and 19th or 17th and 18th. I'm putting that together now. So that's something that um, I'm going to teach a tax foreclosure auction class. It's a 2-day auction. That'll be virtual. And then the following day, we'll actually go out in the field and look at maybe up to about 10 properties that are on sale for auction. And so that's
Greg,
another opportunity.
sorry to interrupt you. I was going to say, do you, in this class, are you going to teach like how to, is it just for properties that are tax delinquent and are going to auction, or are you going to also be teaching like how we can look up these properties before they go to auction?
I am going to teach you that, but I'm going to just go ahead and give you the list. So I'll give you the list. Um, I think I'm gonna give you I have the list, but it's like over 1,000 properties. So I'll figure that part out. But yeah, I'll teach you how to look them up, but then I'll give you the list. Or maybe I'll ask you what zip codes you're interested in and just send you the list. But I have the list. But
The
I'll teach you
17th,
how to look up the list and what to do in that course and everything. You'll know how to bid everything.
the 17th and 18th is a Sunday and Monday.
It's the second Friday and Saturday of May, whatever that date is.
16th and 17th. I got
Is it? Okay. Oh, okay. Yeah, we'll send out an email on Monday.
Correct. You think that so with her, is the ultimate goal just to cash flow enough, to collect enough per month? Or do you think that with buy and hold, it's just collecting as much, properties under your portfolio and then eventually like selling it all?
That's what I think. I think that you want to have a diversified retirement plan. And I do think that having some real estate is good, but ultimately also you want to maybe sell some off and put that money into the stock market, like ETFs or diversified funds for your retirement. And so, but then also keep in mind that with these properties, let's say that we do a cash out refinance now. You can also, let's say you hold it for another 3, 4, 5 years, you can do another cash out. The beauty about cashing out your equity is it's not a taxable event. So you can pull cash out tax free. And so that's what some people do. They pull out cash, um, and they may put in the stock market, whatever, but they hold on to the asset. And the lender's only going to let you pull but a certain amount. Let's just say 25%. That's why I keep using 75%. Depending on your credit, though, they may let you use 80%, which means you can pull out more cash. Um, but yeah, I think that is the ultimate goal. The ultimate goal could be to build a portfolio of 5, 10 properties. Um, let the appreciation do what it does. Um, let the city pay down on the principal. So now you've got a ton of equity, oh, a million, couple $1 million in equity, and then you just cash out and then put that money into maybe another property or the stock market, whatever that is.
And how do you feel about the Baltimore like city in regards to like the appreciation not going as high as other areas, or um, just everything that's going on within the city? Like, how do you think that that will do in a couple of years when you are ready to sell your property?
So I've been looking at the Baltimore market for about 10, 15 years, maybe longer. And so initially, when I was looking at at Baltimore, it was no appreciation. Now I'm seeing a ton of appreciation. Now industry is starting to come back. Um, Property values are going up because the DC market and other markets around are so expensive. There's a lot of people who are moving into Baltimore and commuting into, there's a MARC train that goes straight to DC. There's another train that's coming that's going to go from West Baltimore all the way to DC. And so people are working from home. And so they're living more affordably, but making, higher incomes. And so because of all that, and then if you drive around Baltimore, there's renovations everywhere. And so because of all of that, and all these investors from all over are coming, values are just going up.
That was gonna be my next question. How do you feel about the bubble that they say that investors from other areas have created in Baltimore because they paid high for the properties and tried to sell it high. Some of them are just sitting. This is just reports that I've been getting, and in your opinion on that, if you
I
think
mean,
that we did create the bubble.
I think that the way I look at it is I take advantage of that. And so one thing that I'm going to teach in the tax foreclosure auction class is like 20 to 30% of the properties that are up for auction, to your point, are investor owned. And so they lost the properties. They bought the properties wrong. And so now it's just more opportunities for us. And so now we just have to buy the properties right. But I was surprised last year to see so many properties that are owned by LLCs that are up for auction. It's a high percentage. And so they just bought wrong. They bought in the wrong neighborhoods. They're coming from, like I said, Delaware, New York, Philadelphia, DC, and they're comparing those markets to Baltimore, and there's no comparison. Like you really have to be boots on the ground. Look at the streets, look at the blocks. That's why I like going to Baltimore, and I go maybe once a week now, sometimes more, because you have to really see it for yourself. And the running joke from Baltimore investors, um, if they're unable to sell one of their properties, the joke is they're going to put an ad in the Washington Post because they know if they put an ad in the Washington Post, Washington investors, they're going to jump on it. They see a property for sale for 150, 170, whatever, not really knowing the Baltimore market. If you need to sell a property in Baltimore, put an ad in the Washington Post. All right, any other questions?
One more question: is that the same?
Genesis, how many questions you going to ask,
Sorry,
Genesis?
sorry, Greg.
Look at
I'm,
Jean Marie's happy. She said, I got somebody asking more
Taking my
questions
place.
than
Go for it.
me.
I was gonna say, is that the same as the $100 million fraud scheme? That's the thing that you're talking about, where
Uh-huh.
most of these properties have gone to foreclosure now.
Well, no, I'm not talking about that. But that did happen. And because of that, there's a lot of lenders that weren't lending, but now they are. Now they are lending in Baltimore. But there were some outside investors that did buy up a whole bunch of properties, and long story short, had to foreclose on them. And so a lot of the lenders got stuck with those properties. All right. Any other questions, you guys? Again, if you haven't been to the 4 day, go to our 4 day. It's Monday through Thursday, um, at 8 o'clock from 8 to 9. We do a review on Friday, and then we're out in the field on Saturday. Just a $27 investment, but it's well worth your time. All right. Anybody else before we get out of here? Did Genesis ask all the questions that you guys needed? I'm just messing with you, Genesis.
Yeah, Greg, I'm ready to get names of hard money lender and DSCR lenders that work with you.
Okay, Jay, I'm gonna send them to Keith, and I'm gonna have Keith send them to you.
Okay, thanks.
Okay. All right, you guys, that's all I have. Hopefully, you guys learned some things, took back some nuggets. This is the way to go, you guys. Part of the key to this, though, is you got to buy the properties right. You got to buy the properties right.
I'm
All
ready to
right,
buy my first property, Greg.
all right. I'm gonna have a property for you. Did I send you? I haven't sent you any lenders yet. I think I sent them to your daughter.
Oh, no. Okay.
All right, we'll send them. Keep send them to everybody in our coaching program.
Will do.
Okay, I'll send them to you now.
Okay.
All right, everybody, take care. God bless,
All right.
and we will talk soon. Have a good day, everybody.
Bye.
All right, bye.
You too. Bye bye.
This is locked up.
Can anybody hear me? No. Good day, everybody. Can y'all hear me? No.
Yes, sir. Yeah. Yeah.
Greg, can you hear me?
Yeah. Yeah. Everything's good.
Can you hear me? Greg, can you hear me? Can you hear me, Greg? I don't know what to do. Okay. Let me finish doing this.
Please leave your message for 24035133335. To play your message, press 1. To continue. Your message has been sent. Thank you for calling. Goodbye. Your call has been forwarded to voicemail. The person you're trying to reach is not available. At the tone, please record your message. When you have finished recording, you may hang up.
Hello, this is Olivia Corbett. Please call me back.
Corbett.
Oh my God.